Hello everyone, this is Jim Hall from Affinity Wealth Management with an educational economic update for November 2016. In this month's video, we'll discuss some of the major headlines that influenced markets in October and give you some insight into what they could mean for you as an investor. Please stay tuned at the end for a required disclosure statement. I want to start out this month's conversation with a topic that's on everyone's minds, the presidential election. I think we can all agree that this has already been an unusual election season. And then, in keeping with the ongoing surprises, on Friday, October 28th, FBI Director James Comey sent a letter to Congress indicating that the agency would be reviewing more emails from Hillary Clinton. The markets have reacted to this curveball with increasing volatility, with the S&P 500 hitting its lowest point since July. But when you look past the current volatility and dig into October's markets, you'll see underlying data that is much more positive than the recent volatility and media hype would lead you to believe. In fact, at the same time that the markets were reacting to the FBI's announcement, we also learned two important details that showed the economy is growing: gross domestic product and consumer spending. First, the gross domestic product, or GDP, beat expectations and had its biggest gain in 2 years. This result means that the economy is not only growing, but at a faster clip than most economists predicted. Second, the most recent consumer spending report from September showed it had grown 0.5% to reach a new all-time high. Personal income grew 0.3% as well. In other words, people in the U.S. are earning and spending more money. Good news for the economy. Now, I'm not saying that everything is perfect in the markets, but I agree with economist Brian Westbury's description of our current situation as a plow horse economy. Unlike a racehorse who is fast and flashy, but can only maintain its speed for so long before breaking down, a plow horse plods along one step after another. The motion is slower and less exciting, but plow horses have stamina and strength that their faster brethren lack. As we look forward, I expect this plow horse economy to keep moving along. The election will likely continue to cause some market volatility in the near term, but even less eventful elections also typically cause volatility, because the markets simply do not like uncertainty. Remember that the economy is still continuing to grow. In fact, 86% of respondents to a recent CNBC poll believe the Federal Reserve will raise interest rates at their next meeting. Another strong indication that the Great Recession is getting farther away with each passing day. We might not have a completely smooth ride ahead, but I believe we are still steadily moving in the right direction. I know that headlines and media hype can be disconcerting, but as always, we're here to keep you informed and share the information you need to have a clear view of where we stand. That's it for this month's educational economic update. Once again, this is Jim Hall with Affinity Wealth Management, signing off for the month of November 2016. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your financial situation, please give us a call at 302-652-6767. We'd be happy to talk to you. Now for a required disclosure. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining values, and past performance does not guarantee future results. Again, this is Jim Hall signing off for the month of November 2016. Have a great day.